What is up, everybody? Welcome back to the channel. My name is James and I day trade. So this video is just going to cover my strategy and the model that I have been trading recently since about the middle of November. Before then, and when I made my last strategy video, I was trading the TJR 5-minute move up, 5-minute retrace strategy. Since then, I wanted to dive deeper into why the markets move, how price structure is printed, how the markets just move in general, and a deeper understanding of price action, which has led me to learning, studying, and practicing the market maker buy and sell model from Justin Werline on YouTube. I have not in his course, not in his mentorship. Purely, I've learned and understood this model through his free content and applying it in the markets myself. Now, without further ado, let's jump right into it. My Discord server is live. Link is in the description. Open that link, you'll be taken to this page, read through the rules, react to the message to gain access, and we just talk about the market every day pretty much. It's a really solid community, growing really nicely. So link in the description, go join it. Let's go on with the video. Okay, so currently you are looking at the market maker buy model. This is for longs, this is for a bullish bias, and let's get right into it. So first thing to understand that we need to understand is the 4 reasons why the markets move in the first place. Markets move to hunt liquidity, to generate liquidity, to rebalance to inefficiencies, and to rebalance to equilibrium. So what does that mean really? Well, as you can see here, imagine this line is price. Price will move to hunt liquidity. You've got this sell side level down here. Price will move to generate liquidity. You can see we're generating buy side liquidity here. It will look to rebalance to inefficiencies, and it will also look to potentially rebalance to equilibrium if equilibrium was like down here. Now, the 4 reasons why markets move, and we need to understand those in order to get a full understanding of the market maker buy and sell model. Now, let's get right into the buy model itself. So, as you can see, the first thing we need to look for is an area we expect price to reject. For this, you need to really understand the higher time frame draw on liquidity. To understand draw on liquidity, the easiest thing for me is go to a higher time frame, the 4-hour or the daily, and look at what is being respected, what's being ran through, what's holding bullish, what's holding bearish. So for example, on a daily time frame, if there was a bearish imbalance that was holding, we expect the draw on liquidity to be lower. If on the 4-hour there was a bullish fair value gap that was holding, we would expect for the 4-hour time frame the draw on liquidity to be higher. So imagine this is a 4-hour time frame. This is a daily imbalance. It's holding. We expect the draw to be higher, to be buy side liquidity. So for the market maker buy model, you need to recognize an area we expect to reject from. In this example, imagine this is a daily imbalance and we've just had a pretty big expansion move up coming into this buy model. Simple. So this is daily imbalance, and imagine we've got sell side resting within this daily imbalance on like a 4-hour or a 1-hour time frame. Second thing, and an easy way to spot a buy model or a sell model, is to see where price is generating liquidity. So as you can see on these moves lower towards the area we expect to reject from, towards the sell side level in the area we expect to reject, notice how highs are being generated, buy side liquidity is being generated. That is one of the reasons price moves, to generate liquidity for this move up. And then price comes down into this area we expect to reject, and you want to see clear manipulation, a clear manipulation leg. A manipulation leg can be taking an internal low, taking an external low, putting in an SMT. Taking a random 1-minute low is not a manipulation leg. It must be the internal, external, or putting in an SMT. So right here, clear manipulation leg doing all three on this example, taking the internal low, taking sell side liquidity, and putting in an SMT at that external sell side level. There could also be an SMT here. Doesn't really matter. You don't need an SMT. It's not crucial, but an SMT always helps. It's always added conviction, always added confirmation that price will hold there, if that makes sense. So we've had a sweep in an area we expect to reject. We've had a clear manipulation leg. Now you need to see after that clear displacement back inside the range. Displacement validates manipulation. If you have manipulation without displacement, it's not manipulation, in my opinion. Obviously, you need the displacement back inside the range for that manipulation leg to be valid. Now, what forms of displacement can there be? There can be breaks of structure, market structure shifts, or changes in the state of delivery. That is personally what I use, the change in state of delivery, because I feel that's really crucial to me. Now, what is a change in state of delivery? Well, it is the series of down close or up close candles of that manipulation leg. We'll cover examples in a minute, but this is the manipulation leg. Imagine this was 1, 2, 3, 4 down close candles. It is the series of down close candles. You take it from the open of the first one across. That is your change in the state of delivery. Once that is displaced through, that also becomes your order block. If you're familiar with that, also becomes an order block. But I always just like to keep it as the change in the state of delivery. That shows me prices no longer has any reason to go lower. The SMT also shows me there's no reason for price to come back to this low. So really for me, a change in the state of delivery is clear displacement back inside the range that validates the manipulation. Next comes your entry model. Now your entry model can be however you want it to be. You can choose a mixture of lots of different things. So for me, my favorite way of entering is a pullback to the change in the state. That on its own is enough for me. Some people like to see a fair value gap or an inverse fair value gap as well. In this example, there is a fair value gap that I've drew on. So right here, we get the displacement through the change in the state. We pull back to it and this fair value gap that opened up, because remember, what does displacement makes? Fair value gaps. Easy way to spot displacement. Has an imbalance been made? It must be clear displacement, not struggling, not all 1 ticks, 2 ticks above. I want to see, boom, displacement through, opens up an imbalance. So obviously, your entry model can vary, but personally, a pullback to the change in the state is enough for me. But obviously, you can pair it with an inverse fair value gap, a fair value gap, or a breaker block if you really so please. Like right here, here's a breaker block right there. And then, where do you target? Well, personally for me, the low-hanging fruit, the really confident that I'm confident gets hit, is that internal high. Because when we zoom in, we'll cover this in a second as well, this is a model in its own. Right here, the low-hanging fruit is this internal high. That is normally where I take the majority of my position off. That is what I'm confident gets hit. There's no need to trade any more than that. There's no need to trade the entire move. Equally, you can also target the external buy-side liquidity level or this standard deviation projection, which is you measure the manipulation leg from the low to the high using your fib tool, and the fib settings are right here. Pause and copy them down. And then this 2 to 2.5 projection is usually a strong draw on price, and that is particularly where price will draw towards if this key level lines up with another key level such as buy-side liquidity or an area we expect to reject from. Perfect, amazing target. And again, importance with every model is discipline and patience. You don't want to be here and taking longs because we haven't come to the area yet. You've got to have patience, wait for the full model, wait for that internal sweep, that manipulation leg, the stop raid, because market will always cause maximum pain before moving in its direction. And also have discipline, take your entry, no hesitation, take it, set your orders, hold those orders, have discipline, if there's points to go break even. For me to go break even on a trade, say my entry was around here. If an imbalance opens up right here and it holds, once we get a closeout, I would like to go break even. If my entry was down here, my stop was there, I'd like to go break even once this holds, because there's no reason for price to come back to that level. So that is obviously the market maker buy model. Let's get right into the market maker sell model. Okay, so now you are looking at the same thing, but a sell model. This is for shorts. This is to be bearish, a bearish bias, whatever. So same thing, 4 reasons why markets move: hunt, generate liquidity, rebalance to inefficiencies, and equilibrium. So what you're looking for first, you're looking for a sweep in an area we expect to reject. And you've got to understand as well the higher time frame drawn liquidity. If, again, in this example, say on the super high time frame, a bearish fair value gap has been respected, you expect the draw to be lower. So you expect a bearish imbalance such as this one. So imagine there was a big sell-off for this move. Oh. So you expect this bearish fair value gap to be respected. You expect to reject from here. So buy side taken in the area we expect to reject from. And then what do you want to see after that? You want to see a clear manipulation leg. In this example, I've changed it slightly. We tapped into the imbalance and the buy side level first. We then put in another swing low, again, generating that sell side liquidity. An easy way to spot the model. What liquidity is being generated? Are we leaving behind lows, or are we leaving behind highs, like on the other example? Sell side being generated. We come in, sweep buy side in an area we expect to reject from. And then this is your clear manipulation leg. We've took the internal high, and in this example, there's an SMT at the internal high. After that clear manipulation leg, you want to see that clean displacement right here. You get that 1 minute, well, that change in the state of delivery right here. Clean displacement through the swing low, super strong displacement. And in this example, there is a bullish fair value gap here that gets inverted, which is now marked in red on my charts. So this displacement inverses a fair value gap and gets a change in the state of delivery. That is super clean displacement. And then again, looking for your entry model now, pull back to the inverse and the change in the state, and then that distribution. Once again, the low-hanging fruit, the first target that would be confident would get hit is right there, that internal sell-side liquidity, because once again, when you zoom in, this is a model on its own, looking for that internal sell side. That is what I'm confident gets hit. And then again, you measure the manipulation leg from the high to the low with your fib tool. The standard deviation of -2 to -2.5 projection in this example lines up with the external sell side. That is a great target. And once again, discipline and patience, mega important. So that is pretty much the market maker buy and the market maker sell model, simplified as much as I can. This model can appear on every time frame. You must understand price is fractal. That means you could see this on a daily, and you could zoom in and see it on a 4 hour, zoom in, see it on a 1 hour, zoom in, see it on a 15 minute, a 5 minute, a 1 minute, a 15 second, a 1 second. This model is everywhere because price is fractal. Now, you must understand that, and you must also understand the importance of aligning the model. You must always align models on each time frame. Simple as. Let's go back to the buy model quickly. You must always align the model. So, for example, imagine this is the daily. Imagine this is the 4 hour, right? So on the 4 hour, we come into a daily imbalance, sell side taken, SMT. And on the 4 hour, we've had clean change in the state, displacement, pull back to a fair value gap, move higher, pull back to a fair value gap, move higher. And imagine on the 4 hour, price is here. Imagine price is there on a 4-hour time frame. Now you've got your external buy side level. You know that the draw is higher because imbalances are holding bullish. These imbalances that were bearish are being ran through now. So you know that bullish confluences are holding and bearish ones are being rejected and ran through. You know the draw is higher. So on a 4-hour time frame, you know the draw is higher. Zooming in. Zooming in. Imagine we're now on a 5-minute. This is a 1-hour imbalance. Imagine we're on a 5-minute time frame now. Price could look something like this. We come down. This could be the London session. We sell off. This is our internal buy side level on the 5-minute. London session sells off. We chop around for a bit pre-market. Again, generating liquidity. Market open. Manipulation. Sorry, I'm going to do that a bit neater. So 5-minute time frame. You know, we generate sell side. Market open comes in. Manipulation. Takes all that sell side level in an area we expect to reject, and then we get displacement on the 5-minute. So again, we've generated sell side liquidity now. We've taken the sell side. Imagine there's an SMT right here as well. So in a 1-hour imbalance, after a 4-hour change in the state, 4-hour sweep, daily imbalance, change in the state, aligning that model. This is the external model. This is the external draw. Now imagine zooming in onto a 5-minute. London session sells off into a 1-hour imbalance. This is your 5-minute external draw. Market opens. Imagine market opens right here. Manipulation. SMT, sell side liquidity. And we've had displacement now. So zooming in again even more if you want to. We've had a 1-minute change in the state, for example. Or a 5-minute change in the state. And there's this imbalance that has now opened up bullish. What do you want to see? Something like this. That is your target, and you can leave. Why is this so big? Oh my god. Ooh. Where's that gone then? Anyway. There we go. What do you want to see? That internal high get taken, and you can leave runners to the external high. On a 5-minute time frame now. Price comes back in, taps you in, and then goes up to internal buy side, and then it can continue higher because you are aligning the model on the internal time frame. You've got your sell side of the curve, your buy side of the curve, and then on the external time frame, on the 4-hour. Remember, this was the 4-hour drawing we had. Sell side of the curve, buy side of the curve. Price was there going into open. 5-minute chopped around. You're aligning the models because price is fractal. I hope that makes sense. If it doesn't make sense, obviously go watch Justin Werline. That's who I learned this model from. Evan Trades as well is great at explaining this model. I'll leave links to their channels in the description. But now let's get into some actual examples on the charts. Okay, so we are currently on NQ on the daily time frame right now, and this is actually recounting today's price action, so the 24th of January. So currently there's this massive daily imbalance that has previously held bearish, you know, reaction. We expect that to continue to hold bearish. In addition, on the daily time frame, just recently, 2 fair value gaps have opened up. 2 bullish ones. Now remember, the 4 reasons why markets move: hunt liquidity, generate liquidity, rebalance to equilibrium, and rebalance to inefficiencies. These opened up after this candle closed. So what can we expect the next candle to do? We can expect it to draw towards these new fair value gaps because it's an imbalance, it's an inefficiency. So massive daily imbalance marked out in dark gray just so it's easy when you zoom in. And also there is an SMT with ES because ES has taken this high, SMT, so NQ made a lower high on the daily. Zooming into the 4-hour now. When you zoom into the 4-hour time frame, there's an SMT at these highs as ES takes this high, NQ doesn't. So another SMT in an area we expect price to reject this daily imbalance. What next? Zooming in again. Before market open, market's yet to open, you can clearly see this buy side level, again, an area you want to see taken in an area we expect to reject this whole daily imbalance, with the SMTs currently in place as well, with this high at the time. So that is what you're looking at going in. And also when you zoom into the 5-minute time frame, you can see very clearly generated sell side low, 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 low. We leave all the lows. You can clearly see on the 5-minute time frame we're generating sell side. What you're waiting for, a clear manipulation leg. What does that consist of? Swift moves up to a buy side level, to an internal high, before seeing displacement. So zooming in again now. So on the 5-minute, we've got this generated sell side. Again, you must remember, market maker models will not always be super clear. They will not always be as clear as those drawings I've shown you. You just got to adapt. Price action recently hasn't been the best. So again, you just got to adapt and spot the model. And it all becomes from experience, pattern recognition, and practice over and over and over and over again. You come into the market, you look for the same thing, you trade the same model, trade the same entries, and that is how you become profitable. So you can see here clearly we're generating sell side, lining up for a sell model. Moving into the 1-minute now. You can see, yes, we had an initial sell-off. Sorry. But again, we left behind all these generated sell side levels. It's really clear. It is so clear. Sorry, I'll mark it like this. All this generated sell side, super clear, becomes low resistance liquidity, which will eventually, and we can expect it to be ran. A low resistance liquidity when we expect to take it all at once because it's generated sell side. So market opens, drop down for a little bit, and then we start to get that manipulation leg. Boom, we have news volatility at 9:45. Always think something to keep in mind. Check Forex Factory for your news. Price comes up, takes buy side on this 1-hour time frame, this 1-hour external buy side level. And then we're waiting for a change in the state. At the time it's down here. So we're waiting. Price comes up again, takes the internal high. Price comes up again, takes the internal high. Still no change in the state. At the time it will be here. We still don't get a change in the state. This imbalance as well still holds bullish. So we're waiting. This SMT is still in place because NQ has not come up to this buy side level yet. And also the bigger time frame daily SMT still holding. So yes, we pushed past this buy side level and there's no SMT here, but this SMT is still intact. So we're waiting. Boom. We start to see displacement. We close through this bullish imbalance that was holding. You can see right here, take the internal high and then boom, displacement. So once this internal high is taken, this becomes the change in the state. Not here. Why is it not here? Because this move up is not a manipulation leg. This move up did not take anything. It did not put in the SMT. It did not take an internal high. This is the change in the state because this series of up close candles, as you can see, took this internal high. So that is what you're waiting for. That's what you're waiting for. Boom, displacement through the imbalance, displacement through the change in the state. And again, the swing low is displaced through. So what's your entry model? Well, it can be a pullback to the change in the state. Stop at the high, the SMT high, because again, price has no reason to come back there as an SMT. Or it can be at the pullback to the inverse fair value gap. Or the breaker block, which would be right here. So again, tapped in there. So say we're trading the pullback to the inverse, stop at the SMT high. Where do you target? Well, you can line up your standard deviation. Personally, for me, I would target the internal sell side first, as again, on the smaller time frame, this is your model. That is your model on the internal time frame. The 1 minute, that is your sell model. Generated sell side, generated sell side, generated sell side, generated sell side, generated sell side. Displacement following the manipulation. This displacement validates manipulation. Pullback, that's our entry model. Trade to sell side. That is what you're confident gets hit. That is what you trade, and you can leave runners if you want to the external sell side low, which again lines up with nicely with that standard deviation range in favor of the draw, which we identified as the daily imbalance that opened up a couple of days ago. So that is today's price action. And then if you want extra confirmation, proof of product, why this works, if you use solely the 15-minute time frame, only the 15-minute time frame, where's our manipulation leg? Well, this leg up took out buy side, put in the SMT. There's our 15-minute change in the state of delivery. What do we get? This imbalance gets ran through, and we also open up a bearish imbalance. What happens? We pull back to the inverse right here, pull back to the fair value gap, pull back to the change in the state even. So say entering right there, stop again at the high. Where do you target? Well, you've got this internal level has been taken, so you target right there, internal sell side. But again, this is amazing. Use the standard deviation from the high to the low of the manipulation leg. And this daily imbalance, which we determined the draw was, that opened up. Look where price rejects. To the tick. To the tick. The standard deviation projection in the daily imbalance. That is proof of product right there from today, from today's price action. That is a 15-minute time frame only. And you can see right here as well, sell side liquidity lines up. This is your buy side of the curve. Again, it's not going to be pretty all the time, but you can see generated sell side, generated sell side, generated sell side. We're generating that sell side liquidity, and what happens? It's all ran in one go. So that is a sell model from today. Let's jump into my journal and look at a few more examples quickly. So this is December the 13th. This is a example of a market maker buy model. This is the 1 minute time frame. You can see sell side was taken in an area we expect to reject. Price clearly, this is all-time high. Generating buy side liquidity, all pre-market. What happens at open? Price comes down, takes sell side. This is the series of down close candles right here that takes sell side. There's our 1 minute change in the state. This candle closes above it. We pull back to it, enter in. There was a smaller time frame, like a 15-second imbalance here, which is why my stop was here, but the stop could be at the low. And then where do you target? The internal buy side level right there, all-time highs. If we zoom out on this example, what can we see happen? This is a 5 minute sell side in an imbalance. 5 minute change in the state of delivery as well. Series of down close 5 minute candles. 5 minute change in the state. This candle closes above it. Pull back to it right here. Target all-time high. And then where does price stop? The standard deviation projection from the low to the high. That holds. Again, you can look now at the 15 minute. Sell side taken in an area we expect to reject. We get displacement. This is a 1 hour change in the state, I believe. Yep, on the 1 hour time frame, sell side taken in an area expected to reject. 1 hour change in the state. Pull back to this opening gap, expansion. And again, this is that 1 hour imbalance we saw on the smaller time frames. You're looking to trade the continuation of, this is the buy side of the curve. You're aligning the models because in the bigger time frame, bullish imbalances are holding. So you expect the draw to be higher, all-time high. That's one example. This is a more recent example from Wednesday, the 8th of January. Again, all my trade recaps every single day uploaded on my YouTube channel. So go check all of them out. Every trade recap from every day I take a trade. Even if I don't trade, I'll upload a recap. If I'm sat down at my computer, a recap is uploaded. So January 8th, what happens on the 4 hour time frame? Well, price comes up, takes buy side in a daily imbalance, displaces. There's that 4 hour change in the state delivery. That displacement leaves what? An imbalance. We can expect the draw to be lower because these imbalances have been run through. That is the 4 hour. The 1 hour, again, we've got an SMT at these highs. Price comes into that imbalance. This is my bad. And Q, sorry, here we go. So again, that's that 4 hour change in state, buy side taken, displacement. This is a 1 hour imbalance, a 15-minute imbalance lines up with that. And you're looking, waiting for the open, waiting for manipulation higher. We go on to the 1 minute. Here's open, we're chopping, boom, manipulation, takes buy side in that 50-minute imbalance, in that 1 hour imbalance, after already having on the 4 hour change in state. So again, buy side taken, SMT at the buy side, that is our manipulation leg. What are you looking for? This series of up close candles. There's your change in state. I entered this one a little bit early because I was so confident in it. This was exactly what I wanted to see because I've traded this model a lot. I had the conviction. This was exactly what I wanted to see, this buy side level taken, SMT. So I entered right when we inverse this imbalance and pull back to it, but you could have waited for the change in the state. This candle closes below, this candle pulls back. There's your entry again, stop at the high or above the inverse, targeting sell side liquidity, the internal, that's all you need. And what happens? Literally perfectly, the 2 to 2.5 deviation projection lines up, it holds, and we rebalance. Proof in the product, ladies and gentlemen. This is your sell side of the curve. It's not going to be pretty. It's not always going to be pretty, but we're generating sell side. Boom, 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 boom. That's the internal model right there. Looking at the 5 minute, generated sell side, generated sell side, generated sell side. It's not going to be pretty all the time, I'll admit, but when it happens, and it happens efficiently. So that is the market maker buy and the market maker sell model explained fully to my understanding using my experience, my trade examples. I've been trading this model since around middle of November. Again, I'm not fully mastered it yet, but I'm getting there. I'm feeling confident with it. I'm taking trades with conviction, with risk on my funded accounts, and it's all documented on my YouTube channel for you guys to watch. So I hope this video was useful. I hope it helped. I hope I covered everything. If you still don't understand, check out the links in the description for Evan Trades. He explains this brilliantly as well. And Justin Werline, the person I learned this strategy and this model from. So hope that helps, and I'll catch you all in the next one. Peace out.